Good evening, everyone, and welcome to this very special edition on the Berkshire Hathaway Annual General Shareholders Meet 2019. I'm Avan Dabash. Well, today all roads lead to Omaha as Warren Buffett is going to be hosting tens of thousands of shareholders at the Berkshire Hathaway Annual General Meet. In fact, the Oracle of Omaha and his 95-year-old business partner, Charlie Munger, will be taking more than 5 hours of shareholders' questions. So what are going to be some of the key themes? We'll be finding that out over the next 30 minutes. All right, but before we kickstart all the crystal gazing, we at ET Now want to get you some knowledgeable nuggets from the Oracle of Omaha. Speaking exclusively to ET Now in 2016, he said that one should pay attention to individual businesses rather than the markets. And he also spoke about his outlook for India. Let's listen in.
I pay some attention to the market, but what I really pay attention to is the businesses that we own or could potentially own. And when we own shares of stock, we don't think of them as owning little stock certificates. We think of owning parts of businesses. I think the potential for India is incredible. When I met Bill Gates in 1991, we were just talking, and I said, if you could only hire from one university in the world, which would it be? And just like that, he said IIT. I mean, and then the most valuable person at Berkshire, you know, is Ajit Jain. I mean, it's astounding the number of brilliant people that I know from India. So I'd love to hire people. I would love to buy a business, but it has to be a big business to move the needle. If you buy into a good business, let's say you buy a private business, a very good one, you're not going to look and see whether the market went up or down to the next day. It really doesn't make any difference. What makes the difference is how the business does over a period of time. But if you try and jump in and out of markets, I don't think that you're going to do very well. I've never been able to do well.
So let's hear it from none other than Ajit Jain, head of Berkshire's insurance operations, one of the most valuable people, as you just heard out Warren Buffett saying. And he's often been seen as a successor of Berkshire Hathaway's empire. But here he is talking about the ABCs of investing.
Being in the investment field is a very interesting part of, you know, the whole world of professions, if you will. As long as you keep up the faith, stay disciplined, and make sure that you don't make a lot of hasty decisions, recognizing the markets as one of Mr. Buffett's great quotes is, just remember that the market is not a weighing machine, but is a voting machine. The key in the investment world is avoiding the big and timing is everything.
All right, Ajit Jain there talking about the ABCs of investing. And remember, the Oracle of Omaha is also known for some of those, giving the best advice and giving some quirky quotes as well. Some of the things that he's just said, remember the most famous of all, it seems to be rule number 1 is never lose money. Rule number 2 is never forget rule number 1. That was definitely something that's been very interesting. He also speaks about how the chains of habit are too light to be felt until they're too heavy to be broken. Remember, he also spoke about overall investing, and he has always advised that one should invest with a multi-decade horizon and the focus should remain on the purchasing power. Talking about how if you put 10% of cash in short-term government bonds and 90% in very low-cost S&P 500 index funds, that's really the way to go. Remember, Warren Buffett as well has been a major advocate of investing in index funds. He's spoken about that time and again as to, how if you were uninvested or put $10,000 in the S&P 500 in 1942, the value of that would have, compounded so significantly to close to $50+ million today. So those are some key tidbits which we'll be talking about with our experts. But from now, let's talk about the man himself, how he accumulated his wealth and how much he's accumulated so far. My colleague Jayesh Khalini joins in with some interesting data points. Jayesh.
So Avan, he's worth more than $88 billion as of yesterday's close price on the stock market. Also, he's the fourth richest person in the world. Now, just to give you a sense of how wealthy he is, we tried to do some equivalent analysis of if you had that kind of wealth, what would you be able to buy? So he is, worth more than 70 million troy ounces of gold. That is exactly how much that you can buy from his wealth. Also, he could buy about 1.3 billion barrels of crude oil that we talk about every now and then. To give you a sense of, how he is stacked up against the world economies, he owns about 0.1% of the world GDP, 0.5% of the US GDP, 0.7% of China's GDP, and 3.3% of the Indian GDP as well. Now, if he were actually to liquidate all his wealth and invest in other companies, how much would he be able to buy? To give you a sense of that as well, well, he could buy 9.2% of Microsoft's entire market capitalization, which is currently the world's most valued as per the market capitalization parameter, and also somewhere about 9.5% each of Apple as well as Amazon.
9.2% of Microsoft, but he chose to buy into Apple, as we saw, at least Berkshire Hathaway. Thanks very much then, Jayesh, for giving us that very interesting data on the kind of wealth that he's accumulated and what you could make from that 88 million as we've been talking about. Well, let's move right on then and talk a little bit more in detail about what one can really expect from the Oracle of Omaha. We just spoke about his massive wealth at $88.7 billion. But right now, we have Barbara Ann Bernard, CEO at Wincrest Capital, Safir Anand, IP expert and investor, Dhirendra Kumar, CEO at Value Research, and in just moments from now, all the way from Omaha, attending this very meet, we'll have Deepak Shenoy, founder Capital Mind, on the phone line. Thank you all so much for joining in, and great to have you on board. Safir, I'm going to start off with you then. We've been talking about Warren Buffett's style of investing and, how this big gala event is going to kick off. We understand already that there are hordes of people that have been, queuing up for the last couple of hours or so. Take us through what exactly it is you would really want to hear from him this time around. If you could just give us two golden nuggets that you would want to hear from Warren Buffett.
Well, thank you for having me on the show. The two things that I would personally look forward to would be a commentary that he would make on the US economy, particularly having regard to the huge ongoing bull market and where he sees value. As everybody knows, he has invested in Amazon just recently, and an explanation of what is the criteria for his diversion from traditional businesses into new age businesses would be extremely pertinent. And the second part would be a general commentary on the state of the US economy, because he has made certain comments about inflation and about the fact that interest rates and the fact that, the economy, what has happened may not continue in future. So generally how he differentiates stocks from a general perspective of the economy.
All right, basically focus on the US economy, but I'm sure a lot of investors and shareholders want to know his succession plans, if there are plans to buy more of Apple and all of that. Dhirendra, let me get in your view. Despite, Warren Buffett's legendary stock picking abilities, he's a very staunch supporter of index funds, and he's been favoring them over other investment options for a very long time. And he even went on to make a comment that he would want 90% of his money invested in the S&P 500 for his wife after he dies. You as well have been quite an advocate of these index funds. Give us a sense as to how you're reading into the future of index funds and what you make of Warren Buffett's commentary on this.
No, if you'll recall, 2 years ago, Mr. Bogle, before he passed away, he was at the AGM, and he was, and Mr. Buffett's opinion is, pretty straightforward. It is rooted in facts, and very simple facts, that low cost is the only definite thing and it matters. Diversification is the next best thing if you can't really choose stocks and don't have the temperament to invest. So in that sense, I think, even though, so he has made it, he has reminded us time and again that how to go about, and investing in stocks is the way to go. There are different ways of going about it, and he definitely thinks that there are some horrible ways of investing which is not necessarily investing. And he says that if you do it well, and if you have the temperament, you can be like me. And that is why this annual pilgrimage, this whole this is actually not an AGM. This is a pilgrimage for investors worldwide, and they don't come to know very specific things. They generally want to get life lessons for themselves. They are looking for that nuggets of insights which these two old guys sit there, and we look at it patiently. We'll try and listen to it, we try and make sense of it, and most of it will be rephrased. They are witty people. They rephrase and say things which is far easier to absorb. They become memorable, and many a times it is not giving you new insights, but just re-emphasizing, giving another logic, another rationale. I'll be quite looking forward to a couple of things, which is Berkshire has an impeccable track record, and that is why this has become a pilgrimage. But over the last 10 years, it has not been able to beat Berkshire has not been able to beat the S&P 500. $1,000 invested in S&P 500 will be worth $4,000. Of course, and it will be only worth $3,500, and this is 10 years, in money invested in 2009. Then I will be very curious to know about, a big deal which has gone haywire, the Kraft Heinz deal, and his explanation for that, because he has been talking about it. Of course, he has gone on record, but I would like to understand the insights or the insightful learning for him. And that apart, of course, you have talked about the succession, and it is a question which has been asked time and again for the last decade. But more importantly, what is his next move about the $103 billion he's sitting on? That is something I'll be very curious about. So, interesting things, Kraft Heinz deals, I'll be quite looking forward to his explanation, what made him go for it. He has given the nuts and bolts of the transaction when it actually cut the dividend in February. But it was a big deal, and how he goes about doing it, and it was very unlike him. He went for Kraft Heinz deal for explaining it that normally he never takes such a bet without actually owning the company. So what has gone wrong? Lessons for him.
Yeah, right you are. Lots of questions on that front will also be keenly watched out for. So let's take it across to Deepak Shenoy, founder Capital Mind, who is perhaps queuing up outside or, making his way inside. Deepak, you said that perhaps it's redemption because you don't really like standing in line, but you've been doing that for quite a while now. Give us a sense as to what exactly is the mood out there. Clearly, shareholders are queuing up.
Yes, they've been queuing up since 4 a.m. I was ridiculing people at some point about why would they stand all night in a line to get an iPhone, and just guess what? People have been standing in line. I've been standing in line for the last 2 hours waiting to get into in a very, relatively cold, at least from the India perspective, Omaha day. The sun's out now, but there are a lot of people standing in line. I think the idea of it being a pilgrimage is right, because this is how, people don't generally queue up to listen to AGMs. AGMs typically don't last like the whole day. You have two people, both above the age of 85, patiently taking questions all day from the audience, from the internet or email, and they are going to be answering those questions all with a small lunch break in the middle. This is quite fascinating, and I think all questions aside, there is obviously a sense of feeling of every year there's a new world, there's a new set of IPOs, there's an Uber, there's a Lyft, there's a bunch of businesses that aren't typically Buffett that are out there. So what is his view on them? What new ways he will actually explain some of these phenomena? And he has the penchant for simplifying things in small nuggets. So I think that is one thing that most of us who are here will be looking for. But everybody comes with different views. Any pilgrimage does. So it's fascinating to see, a crowd of this magnitude here since 4 a.m.
Stay on with us, Deepak. I'll be asking you a lot more, not just about the schedule, but what you want to be hearing as well from Warren Buffett. Let's connect in the meantime with Barbara Ann Bernard, CEO at Windcrest Capital, who's joining in. Barbara, first up, tell us a little bit more about the motive behind organizing this conference.
Well, the discrepancy between the representation of women in the investment field, despite their outperformance, is quite remarkable. And historically, or anyway, the last 2 years, I've been asked to speak at conferences in Omaha, and I've typically been one of the few women in the room, and definitely the only female speaker. So we decided that there are tons of talented women out there, and we need to encourage them to come. It's a wonderful event.
Safira, I just wanted to get right back to you. Recently, we saw that news hitting the headlines with respect to Berkshire Hathaway's investment in Apple. What do you make of that? Because he had spoken a little bit about how the company is, a fairly good quality one. Do you think that in this AGM, we would perhaps see news about buying more shares of Apple or some sort of an actual justification for that stake buy? What would you want to hear on that front?
Well, I'm not sure whether in the AGM he would justify his stand vis-a-vis Apple or vis-a-vis Amazon, because Apple has done very well in terms of an investment for the year. The stock has already rebounded significantly from its lows, and it continues to throw up unprecedented amount of cash, which is something that Warren Buffett traditionally likes a lot. What is more interesting for an observer like me would be to see what Warren Buffett perceives about the cash, because you are in a business of technology, and Apple is far more than technology. It's essentially a huge bet on the sort of marketing that they do around their products, and to see that where he does not perceive a risk of any technology obsolescence, because we always hear about a lot of products that are coming up, and some of them are successful and some are not from the competition. And I think it's a very interesting thing of how he sees the longevity of this entire exercise and why he believes that it can sustain. And from an Amazon perspective, how a new form of valuation around a business model that strives on lower cost but has huge impact in terms of customer satisfaction and wanting to engage more and more is built into his valuation matrix. So these are very interesting transitions from a traditional method of investing that hold a lot of insight for a prospective person like me and perhaps a lot of other investors.
Deepak, give us a sense as to what the schedule is like, when we could see Warren Buffett actually start speaking, and would you also want to hear about the subpar performance over the last decade and a half or so for Berkshire?
It's interesting. I think, there's things about performance, and I don't think they will be, focusing on too much in terms of having to beat or not beat the S&P. But I'd like to hear the answer to the question, like, you have 110 billion. Why wouldn't you park some of that at least in, some of that at least into an index ETF, which you had otherwise perhaps done by writing those puts on the S&P in 2009. That was effectively buying the S&P a little bit cheaper than it was at that time. But, when you have this much cash, would you consider putting that? So these are questions. I don't know whether they will be asked, whether they will be interesting questions. But I don't think Berkshire's performance in the stock market is something that, has been something that, Warren Buffett has concentrated on. Though in this year's letter, he's moved away from talking about the increasing book value of the Berkshire stock to talking about the increasing market value of the Berkshire stock. So there is obviously that that differentiation that has come in the letter itself, and I'd like to see how that also reflects it. I agree with him in a lot of ways, in the sense of that book value doesn't really reflect the value that is being created for investors. It's really market value that is, and perhaps just talking about it as a metric is a good idea. I'd like to see that. And probably 2 hours from now, we will see him on stage. I don't know the exact schedule of events right now, but we're just waiting in line. We're not yet in, and the line isn't moving. So nothing's happening as of now. We're not even being let into the hall. So there's still a long way to go.
Okay, that's still 2 hours. We'll be waiting, of course, as to when that begins. But Dhirendra, Warren Buffett, 88 years old, Charlie Munger, 95, and neither of them have publicly signaled any plans to retire. The board, of course, is going to quickly install a new CEO when the time is necessary. But are you curious to hear a little bit more about the succession plans?
Oh, I'm sure they have put their succession plan in an envelope. They are very thoughtful people. In fact, today's Wall Street Journal carries one of the most insightful interview. An interview which was done over a span of 6 hours at Charlie's home, and where his physical condition is also described, and he describes it very candidly, that it takes him effort, and he puts a large magnifying glass to read things. So those physical constraints are definitely visible. But I don't think, this is a question which has been asked for the last 10 years, and people have been guessing. But they're very thoughtful people. Not only that, one should understand that Berkshire is a holding company, and it's a collection of companies which are run independently, in a fairly hands-off way. So the aggregate of all those companies which is reflected in Berkshire's net worth is one aspect. But Berkshire has, I think, if I can recall it correctly, less than about 20 people. So it's a leadership. It's being thoughtful, and I think what has happened as a result of the cult that has come about, and the people around Buffett, and their the way he goes about acquiring company, delegating completely, and one communication in a year with his wholly owned companies. He doesn't like spending, guiding those people, and he wants that those people to be sending them just one note, all money getting aggregated in Berkshire Hathaway. So I think succession is one thing, and I'm sure that they already have it, and they really don't want to give surprises, or preempt things which a lot of people will be anticipating.
Okay, so you believe that has already been sorted out, and we'll get to know when the time is right. Meantime, Barbara, let's understand from you what exactly is the case for building more female representation. You had Melinda Gates, who recently said bias can be woven into the fabric of an organization or designed out of it. When women control the money, female founders get funded. Can you tell us what research really supports that?
So I love this question. What's the case for homogeneity, right? It's just preposterous that we even have to ask that question. I think the case is representation, it's diversity of thought, but the most powerful case is the numbers. If you take the performance of the HFRI Women's Index, which is a subset of the HFRI, which is the overall hedge fund index, the females have actually outperformed by an annualized 4.24% every year for the last 5 years. So that's a cumulative 25% outperformance. So for all these endowments and pension plans that are who are underfunded and looking for returns, and everyone's trying to find alpha, I think we know where to find some. So there's a very strong business case for it. Okay,
Deepak, I'm going to come right back to you. Safir was talking about how he wants to know a little bit more from Warren Buffett on, the scale of the U.S. economy. But would you also want to hear about any sort of plans on U.S. President Donald Trump from Buffett? Because he has been a harsh critic of Donald Trump during the 2016 presidential campaign.
Well, I guess I would imagine this shouldn't get political, but I think it kind of reserves its views in some way. But I don't believe that going down the political path right now would be useful because it will kind of derail it. I think at best a smart and witty answer would be all that I would like to hear. Personally, I'm kind of apathetic in a lot of ways to the whole political landscape. I think it's now a comedy more than it is business. So, I would not be happy if the conversation went down that route.
Yeah, and witty as an answer is, I'm sure, something that we can expect from Warren Buffett. Safir, what about you when it comes to India? Because Warren Buffett has gone on record to say the potential for India is incredible when it comes to hiring. One place that they would look at very closely would be IIT. On that front, how have you read into his commentary about India?
Well, no matter what, I don't think India is escaping the attention of a lot of people around the world, and one of the manifestations of that is in the huge amount of FII money that is flowing into India. It defies me personally to understand why Warren Buffett has not been able to identify a significant investment opportunity in India, while he sees a lot of potential in, for example, in education and in the kind of innovation or employment opportunities that an IIT may deploy. Historically, Warren Buffett loves the insurance sector and businesses that generate a lot of money from the collections. And it would be very interesting to see whether his stand on India now stands fortified because of the rate of growth that the Indian economy is registering vis-a-vis a lot of slowdown in the rest of the world. Also, in context to the American economy, more than the comments upon politics, it's more interesting to see that he's in a situation where the US economy has gone through a bull run. He's sitting on a significant amount of cash. He knows the fact that things are not going to be the same in future, and yet he's just picked a significant investment in a company like Amazon. So it's from a student perspective, as somebody who likes to trace Warren Buffett and understand his ideology and his thinking process, is more of an understanding of where he sees sustained value and disruptive innovation as opposed to that. And if that opportunity extends to India for any reason, because of better governance that the economy may see, or because of the slowness in some of our growth rates, which may not continue in future, then it'll be interesting to see what perception he has. I think in the past, the concerns on India have been more on governance and the kind of disclosures and the scalability of companies. And if some of those are now off his mind, it'll be interesting to see his perspective on India.
Oh yes, it sure will. That and a lot more will be very keenly watched out for by shareholders. And thank you so much then on that note, Dhirendra, as well as Safir, Barbara and Deepak. Hope you enjoy the AGM, and we will be keep getting you tidbits from that as we will be tracking the Oracle of Omaha in the latest AGM. Thanks for watching.